SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Good morning everybody. Crypto is on fire. Twitter is on fire more than anything else. I've seen so much stuff going off on Twitter at the moment. It's unbelievably amazing to watch emotions run so high. But I can understand why if we just take our attention over to the USDT stroke DC chart. What the heck? This is basically because, the Coinbase said, yeah, well, we had a few billion over in Silvergate, didn't we? So, might not be seeing that again, but yeah, it's gone. So, we're seeing a depegging to the max. Well, not to the max, obviously, we've seen what depegging to the max looks like, but from the top to the low, that is a 16, moving on towards a 17% depegging of a stablecoin. No, very nice, very nice. Look, I don't know about the intricacies of USDC. It's not my preferred choice, to be fair. When you're in a long-term cash position, it's always better to have cash. When I sold a fair bit, obviously, didn't I, back in 2021, November, December, when Omicron was coming around the corner. I did say, you know, if you're looking to hold a cash position for a reasonably long period of time, you know, real money is probably best to do it, to be honest with you. Stablecoins are great for trading, definitely. Sometimes you don't have the option to do that, though, but Binance gives you the option. Obviously, Coinbase gives you the option to hold real cash, put it into pounds. You know, in hindsight, it should have been dollars, but it was still better in real cash. But yeah, USDC, I've never used it, and to be honest, I have no reason to distrust it. To be honest, I remember back in the olden days. This is like going back a couple of years now, maybe more. There was always this discussion about what stablecoin's best, and at the time, and again, you know, who knows what's real or what's not, but at the time, and again, this is going back 2 or 3 years now. BUSD came up as the better option as far as being backed 1-for-1 is concerned, or at least proving to be backed 1-for-1. I'm not, you know, saying that is the best one, but that's what it came out as. It came out as the better one. But yeah, you'd like to believe that USDC is legit and stable. Clearly, we're not seeing that here, but you'd like to think so because Coinbase, you know, they come across as trusting. I've used Coinbase for since as long as I can remember, 2015 or something like that. I've always used Coinbase. They've always been there for me. But yeah, depegging at the moment and reattaching itself right now. Anyway, it shouldn't be doing that. But again, that's just something to admire for the moment. So hold your horses. We'll see where that goes. We'll see what comes out over the weekend. We were doing the stream last night, and I was saying, look, this weekend's going to be very telling for what's going to take place in traditional markets this following week, especially with CPI coming through. What's his face? Biden reckons that it's going to be favourable. Maybe he knows, but who knows what he knows, or does he know anything? He seems to. He did say out loud that CPI is going to be good next week, whatever good might mean. I don't know. Anyway, so let's just quick overview of how markets closed yesterday. So the euro working exactly as expected. You know, the reason I say that is not, I don't say it to blow my own trumpet, although sometimes it is worth recognizing that you called it. It's because that's what Carl the Moon says. That's why I say as expected, because that's what he says. He draws a line on a chart, and you know, and he says both things, and inevitably, if you back both sides of the chart, then you're going to get it right, and then he'll come back the next day and say, as expected. But obviously this analysis for the euro has remained the same since, well, I suppose December, really, as we were going up and then coming back down into the golden cross. It's all the same. So it is exactly as expected. And it's a decent move as well. And I was saying to the Patreon guys last night that, you know, despite the collapse in, it's the banks that have been bringing down all the S&P and stocks, but you know, gold and euro dollar have worked out exactly as expected. You know, retested that golden cross. They have worked well. That's exactly what you wanted to see. That's what we got. Those trades worked out okay. Unfortunately, S&P didn't, because of all this madness that's going on within traditional markets, stocks, mainly, obviously banks. You look at the losses that took place for banks globally yesterday, pretty savage. So this might mean that, you know, we're going to be looking for some kind of, not Fed reversal on their policies, but maybe not the 50 basis points. And it could be that what we're seeing here with the euro isn't just the TA working out as expected, but it's basically the markets trying to price in as best as they can a 25 over a 50. Again, you're not seeing that on stocks. You are looking at that potentially taking place for Forex. And obviously gold's, you know, proving to be the hedge at the moment. You know, this is what we wanted to see for Bitcoin, but gold is typically seen as that hedge. And we're seeing that working out quite nicely now. And again, you know, 2 trades that worked out pretty well. Everything else stopped out, unfortunately. And let's have a quick look at the old Dixie, shall we? So a rejection from this level. Again, you know, TA is not everything. It doesn't always work. But, I mean, I remember saying back down here that we're going to be looking for a bullish run throughout the whole of 2022. People were like, nah, what are you talking about? We got that. I remember saying that this is likely to be the top. We're going to see pullbacks, significant pullbacks from this level. People saying, nah, I don't think so. And we got it. The big major swings are the things to pay attention to. They are the way. That's how you navigate the trading environment moving forward in whatever it is that you want to do. Whether it's well, anything. I mean, this is effectively a bear market, but it's a bull market for the dollar. Now we're looking for some serious moves up for stocks and everything. We got all of that. And again, positioning yourself appropriately when you see these sort of major swings taking place. What are we seeing at the moment? Sharp rejection, still in a bullish uptrend on the daily, provided we remain above 104.4. Probably looking to really close below 104 completely. And if that's the case, we revisit this low 101 and maybe even down to the bottom of the channel. And we've been saying this the whole time that we've been in this. And again, this trend goes on for a very long period of time. This is an ancient trend line. This is a rising channel that's been, we'll call it significantly in place since we came from the bottom to the top. So confirmed around what, 2011. So it's about a 12-year chart really of significance. We all know what happens with rising channels. They often, most likely, break down, right? Again, you know, where was Bitcoin at its all-time highs? When we found the Dixie down at its all-time lows, more or less, give or take. You know, that was it, basically. And we found a bounce from the dollar, which ride all the way to the top of this channel. At the moment, we're smack bang in the middle of it, probably looking to meander around in this area for a little bit longer. And decision time being given to us by the daily, also by CPI, and also by Fed policy. And not just Fed policy, but ECB, Bank of England, Bank of Japan, you know, whatever it is that they're all going to say, will move this chart. Right, so shall we move on to Bitcoin then, shall we? We're beating around the bush, fannying around with all this traditional market stuff. But we do need to do it, especially when we're looking at, you know, banks seriously selling off. You think you're in a shitcoin, wait till you see some of these banks. Oh my god, they have really crashed. People talking about financial crises and things like that, which is a realistic possibility. It is realistic. It's not, I wouldn't say at this stage most likely, but it's not unrealistic, let's put it like that. But again, still early days. Still early days. And again, these markets are here to be traded, you know? This is why I suppose it's always good to have money outside of banks, isn't it? Whether you're talking Bitcoin, gold, or just, I suppose in anything as simple as a trading account, for instance. You know, outside of your banks. Banks are great, let's face it, you've got no alternative, really. No real alternative. But yeah, let's face it, sometimes it's nice to be in situations like you and I have found ourselves in, where we can not just avoid problems with banks, but actually profit from that. I know that sounds awful, but you know, once you become a bit more financially fluent, should I say, these are nothing more than opportunities. You know, they're gonna happen with or without you, so don't feel bad about taking advantage of them when they do occur. That's, you know, it's not us that have instigated any of this, but we can clean up as a result. Right, so looking at Bitcoin on the weekly to start with, that's your weekly 20 moving average, a Bollinger Band center, the line in the sand. Are we above or below? If you're above, 65% more likely to remain above. Below, 65% more likely to remain below. Currently supported above it. Again, this is weekly on spot here. USDT, Binance. So we're not looking to close this chart till tomorrow night. UTC. I've got stable coins on the brain. So we've still got a fair bit of time to see where we close on this one. But again, while being above there has the opportunity and the likelihood of actually bouncing from there. So that is all very much true. Also, just wanted to bring your attention to the volume signature on the weekly here. Quite large so far, and again, we've still got, you know, another 36 hours or whatever for this to close. It's not the highest we've ever seen, but it is pretty high, significantly high. Who's been higher than this in the past? Well, recently we've had 4 signatures higher than the one that we see right now. Normally when you see these enormous reds, especially on weeklies, they mark significant things on the charts, and most of the time they do mark a bottom or close to a major bottom because they refer to panic selling, basically Captain Noob Master, you know, getting out of his position, selling the lows. We see it all the time. Here's your March crash, and you know, before we got to that, you know, that was the highest we'd ever seen before, the March crash. Bang, marked a significant low, and we all know if you'd have bought that low, you would have been laughing all the way to the bank. The next one after that was the May dump, the May crash in 2021. That marked the next biggest, highest one. It was also, like I say, the dollar low. So things were turning around and changing. But again, very significant crash on Bitcoin and the whole of crypto, marking an enormous, absolutely enormous red, the biggest red we'd ever seen. Again, scraping that low might not have benefited you immediately, but over a little bit of time, you would have doubled your money. I say a little bit of time, quite a bit of time, really. But yeah, you would have doubled your money in about a 6-month period. Not quite as significant as, 10xing your money from this level, but still, taking advantage of Captain Noob Master's fear. So we're sort of working on a similar kind of read to that at the moment. Again, the volume signatures are always going to be large now because we trade extremely large volume. It was never the case before to see anything close to 1 billion back in these olden days. You know, it was crypto was the liquidity of crypto alone, never mind Bitcoin, but the whole of crypto was very small. It's a lot bigger now, and it remains large. There's still plenty of money, plenty of liquidity in this system here, to be drained as well as to be made. So yeah, we look at it in comparison to what we've seen recently. So this is where, you know, there's been a lot of money involved in crypto for the last, well, we'll call it 12 to 18 months. So it's going to always look different. But yeah, we see in this one working on, you know, one of the higher ones. Again, that's your FTX. That's the biggest one yet. So let's have a think about the daily, what we see on the daily. Because actually, when we take it to the daily, yesterday's daily volume signature was the second largest in history, which is quite telling to the fear in the market right now. Now, that said, we've already recognized that the 20 weekly is where we're being supported on. That's a good place to find support. What's on the daily? The 200 daily moving average is a simple moving average. It's also a technical golden cross retest. We were looking for support on the 200 exponential. We didn't get it. Again, subject to broader problems in all the markets, and not just for crypto. Crypto's got a lot of its own individual problems. You've got Biden saying he's going to tax minus 30% extra because of all the electric that they're using, and obviously you've got the connections with Silvergate and Coinbase. Now you've obviously got USDC depegging. There's a whole range of FUD that's flooding into the markets. Capital gains tax raising by, or potentially doubling so in the US. The banning of staking, which I have recently seen that, you know, Binance has done as well for the UK. So more reason to move to other platforms, I suppose, if you're looking to buy, hold, and stake. And yeah, so the list is endless, and it is probably going to continue with that. So again, you know, supports, you know, they hold until they break, and they break usually to do with continued momentum and especially fear. And there's a lot of fear in the market. But for the moment, we're holding on that 20 weekly. We're holding above the 200 simple moving average, which is sitting roughly around 19,700, give or take. So while above those areas, there is hope for a bounce, maybe a bounce back up to the top of this box, 21,400 at best. But for the moment, yeah, all we've got is similar reads to previous significant lows. And again, just looking at this one for an example, That was your first stage. That was your second stage of the dump. First stage was here. Second stage was here. It took 2 days for that one to play. It also gave us bullish divergence on the money flow index, which is a telltale sign of a low being formed. Again, it's an ultimate knife catch. If you're going to buy the fear, then that's what you do. You have to buy into the fear. It doesn't mean that you don't feel the fear yourself. You just have to buy it. So again, this is a long rambling video. It's difficult really to give any major heads up on what's really going on when day by day, bit by bit, almost hour by hour, something new creeps into the forum, which is effectively FUD, you know, or something as crazy as this, you know, which is definitely crazy. Is definitely crazy. I mean, what is next? You do have to ask yourself what is next. But if we stand back and think about the overall trading environment, despite the banking problems, the stablecoin problems, the general trading environment remains partially okay. When we think about the way that the euro is moving and the Dixie and obviously gold, you know, we talk about the domino effects, don't we, of trading crypto. So you think you want to trade an altcoin, you've got to look at Bitcoin. You want to trade Bitcoin, you've got to look at the S&P. You want to trade the S&P, you've got to look at Forex. And at the moment, at least the major domino, the biggest one, the most important domino of all, being the Forex pairs, is actually working exactly as expected. So this portion of the overall trading environment is actually still okay and working on a decent bounce. It's not confirmed yet, but you know, we're still in the, or say the royal we, I'm still in the position from here in the hope that we do go up to make a new high on the euro. Again, we've got CPI coming out as well, PPI, all this stuff that's going to affect this, but from a technical basis, seems okay. That's coupled as well by the bullish divergence here, 3 significant drives of which we've got to help power this move on forward. So again, you know, it is a mad market and probably one best left alone for the moment, unless of course you want to start to dollar cost average for a long-term position to buy, hold and stake. Obviously not able to do that in Binance, but stake on, I don't know, crypto.com or Coinbase if you want, or SwissBorg, which is one of the ones that I tout for that kind of strategy. But yeah, dollar cost averaging into these lows as they form in what could be a significant sell-off, black swanny type sell-off, is not a bad idea. I did deploy 10% of my available tether into some of my sort of favorite altcoins that I wanted to buy, hold and stake for the long term. I know I'm probably going to get questions about this, but the ones that are probably okay to talk about would be Algorand's. You know me and Algorand, we've got a good thing going on. I think it's extremely undervalued for what it is, and it's definitely worth picking up in the teens. But yeah, there's other ones as well, but again, yeah, it's not for me to be reeling off lists of altcoins in case you decide that you just want to go buy them blindly because you've heard me on YouTube talk about them. It's kind of not really the way you should be thinking about trading or investing. You should do your own bits. But Algorand, I still think, and I strongly believe, significantly undervalued at this exact level. Buying Algorand in the teens will be something you'll look back on in years to come as like an epic thing. And when I say epic, I always talk about, you know, epic gains, and for me epic gains are like 10x, you know, and that is epic gains. I know everybody wants to do the Matics. We did the Matic, by the way, you know, we bought Matic, you know, between 1 and 2 cents, but those sort of things come around far and few between. If you want to, you know, 10x is nothing to be complaining. You just don't complain about getting a 10x on anything, all right? If you're complaining about a 10x, that is, you seriously have some kind of entitlement issues there. 10x is an amazing game. Right, so anyway, I'll leave it with you now. I am just rambling right now. Keep your eyes on these charts, especially this one, and we'll see what happens this weekend. The price of Bitcoin this weekend is likely to be a pre-market to the pre-market coming in on Monday. So we've seen that before, and I would imagine that to be the case this weekend. So we really do want to hold that $19,700 zone throughout this weekend into Monday, because if we don't, that will, I believe very strongly that what we'll see then would be continuation on S&P, Nasdaq, Dow Jones Industrial Average to the downside, and Bitcoin will be used as a risk barometer for a pre-market before the market opens. It's going to be a crazy week next week. It is really going to be crazy. And so it's probably best to stand back and honestly watch the dust settle, because if we do crash further, amazing opportunities will present themselves. If we stay at this level or above, yeah, eventually we will get some opportunities as well. But for the moment, unless you're in the winning trades, being, things like euro, dollar and gold, where, obviously stop loss is tightly in profit, it's probably best to wait for an actual opportunity to present itself for a trade. Dollar cost averaging into, serious dumps like we've got here, 10% each time, maybe 10% of your available capital with every 10% that we see drop on these altcoins is probably not a bad idea for a long-term thing. But from a trader's perspective, I'd still say it's definitely very messy when it comes to stocks and crypto right now. And at least there's some other ways that we can trade, being Forex and gold, that are working and are respecting their charts. Right, thank you for watching. I hope you have a nice day. Take it easy.